Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Mike Miner of Professional Ag Marketing. It was a mostly lower day on Thursday with the exception of the corn market. So Mike, let's start off there. Corn market has been really resilient, held up quite well with all the bearish yield news and production news that we pushed at that market starting Tuesday.
Yeah, well, it's not often we increase supply in corn from one month to the other 1 billion bushels, and that's exactly what we did at the beginning of this week. And, demand, I thought to see that jump 500 million bushels as well to offset some of that was friendly. I thought if you would have posted a 188.8 yield from the United States, we would have been, somewhat limit down type levels, and we haven't reacted that way at all. And actually, it's held in quite well. So it really, at this point, corn market's been very supported after this little break. It's going to be a tough one, I think, to get legs under it with the current fundamentals hanging over its head.
I don't disagree, but do you think maybe the low is in, or do we have to retest last year's 385?
From a seasonal perspective, the last 5 to 10 years, it's been very normal for us to put a low in at the end of August. You go further back than that, typically a big crop would get bigger and you'd put a low in September or October back in the good old days. So last year, it was August 26th, around that mid 380s level on December corn futures. We've tested around that area. Some people have been calling that the low is probably in. I would argue that it's going to be difficult for the USDA to get a bigger yield going forward. So from that perspective, I think the balance sheet could potentially improve from here. So fundamentally, sure, we could probably put our low in here somewhat soon on this corn market.
The resiliency that we've seen in the corn, do you think it's partially because maybe the market doesn't believe that the yield can be 188.8 or not?
Potentially. It was a huge step. I mean, that was the last time we saw that type of an increase was 2016 when we increased 7 bushel to the acre that year from the July to the August report from 168 to 175. And that year we pretty much held it there. I mean, it stayed right around 174 to 175 from then on out. So this year, I think there's enough problems in that Eastern Corn Belt that have been made public through sampling and getting in the fields that this market's going to have a tough time believing mostly the Eastern Corn Belt yields. You start to pare some of those back, that moves the yield fast, maybe towards more of a 186. So at this point, I don't think it was the fact that the traders were trading a 188 already. I think it was more that, well, we'll sit with the 186 or 185 yield and see if the USDA can come back to us.
Do you think the yield is out there? Because you just wrapped up your annual crop tour. What did you find?
Well, I believe that the way you calculate the August WASDE, they came in right where they should have, between satellite imagery and farmer surveys, which should have been between 188 and 189. And they came right in between that level. So both of those have looked and sounded superb. I think the Western Corn Belt was fantastic going through that area. You go to the I-states, Illinois, Indiana, and Ohio out there in the Eastern Corn Belt, I think my samples came in 80% of the samples came in lower than last year on that crop tour from the same sections and areas and farmers. So in my perspective, going out, pulling the samples in the Eastern Corn Belt, I was disappointed to try to get them up to something like, a 220 plus type yield out of Illinois. I was at more of a 207. So I think that the Eastern Corn Belt, those 3 states, you pare those back a little bit, you can easily pull that yield back to a 186, 185. I'm going to stay pretty comfortable in that area, I think, Michelle.
Gotcha. Okay, soybeans have had 3 up days until today. Was this just some routine profit taking? Did we run up into chart resistance?
Well, honestly, going all the way back the last year or so, we've stayed in this range between basically 10 and 1075 on November futures. So this rally we had here up to 1049 today at a very key downward channel resistance from all the way back to like 2023. That was a very key point. If we would have broke above that, I would have been maybe looking more towards that 1070 to 1080 area on November futures. But we held that resistance really well. Now we probably start to pull back a little bit like we saw today on the profit taking. But from one one thing's the next. Sunday night we saw some really nice action after Trump's truth post that came out, quadruple soybean purchases, for China. Then the next day we saw the 90-day truce, and I thought that was bearish, but the market's been treating it friendly. And then to cap it off, you got the bullish WASDE report. They cut acres back. Yield wasn't that much of an increase, and the balance sheet actually shrunk month over month. So when I look at the soybean market, you made a very systematic, very normal 50 to 70 cent rally in that market, and then you typically find that as a good level to say it's been a big enough rally. Let's take a little bit back, and that's what you're seeing today. But I think the soybean market's very comfortable just above $10 fundamentally, Michelle.
53.6 obviously is a big yield for national soybean yield. What did you find when you were out in the field doing those surveys? What did you see out there for a crop? Is it that big?
Consistency, yes. The consistency is totally there for the soybean crop to be a massive one. We all know that August is what makes soybean yields, and we haven't wrapped up yet. I do feel like, especially in the Western Corn Belt, that we're not rushing this soybean crop along very much at all. At this point, I don't think I'll be getting into the field any earlier than maybe the last week or so of September at this point, which was a little disappointing. At this point, it's consistent. Are we going to have that full big robust finish and really fill at the end? That's probably up in the air yet. There's some white mold and there's some other sudden death issues out there that we're seeing, but not a whole lot else other than that. So I still think soybeans have okay potential, but the August weather maybe could have been just a tad better, but not much.
Your thoughts about China, will they come into the market in time for our export window? Or are they not going to buy as much if they do?
So we've been knocking on the door now. This will be the latest ever that they haven't made a new crop purchase through this year. So very disappointing from that perspective. They've got a little bit of a shortage on soybeans supposedly, but they're also, they're cutting their sow herd. They're buying more beans and gathering their relationship with Brazil. They come in more January, February with their exports. So if China really thinks that they can make it until through most of the winter to have to buy soybeans, they probably think they're going to get a bargain buy on the US at some point. The markets are going to be discouraged if we do not make export sales to China because our soybean oil crush capacity, we're just not expanding at a fast enough rate to fully offset that lack of export business. So China probably thinks they're going to get a pretty good bargain buy here at some point if this yield is pretty big and nobody's buying their soybeans. We'll just have to see. At this point, they seem pretty comfortable around $10, I think, Michelle.
Down day in the cattle on Thursday after we kind of ended well off of session highs, got up into those contract high areas, couldn't take them out. Is the market starting to look tired technically or not?
Well, they always talk about at the peak, you see the most volatility. We've seen a heck of a lot of volatility lately in this cattle market, which is kind of like the good old days after we just climbed higher and had low volatility for so long. So at this point, it seems like the cattle market's getting a little tired, maybe led by some more weakness in the northern cash trade, where maybe we're going to be coming into some more cattle numbers here in the north going forward. Packer margins are very poor. Cutouts kind of bounce back here, so that's been friendly on choice, I feel like, but still not the best environment for these northern packers to make any money. In the south, I still feel like that the leverage is in the producers' hands a little bit more now. They're missing out on some Mexican cattle going forward. I think that's going to help turn the tide more for the southern producer to gain some of that leverage back, rather than, the north has had very incredible basis levels the last recent history. So this cattle market, I think we just pulled back to the bottom end of this uptrend. Business as normal, a very routine, normal setback for dollar wise, back to some major support levels. It's going to take a lot to just completely say, okay, this cattle market's over with, just because we can have massive ranges right now and really not break many trend lines, I think, Michelle.
Interestingly enough, you told me if you lay an S&P chart over a cattle chart, they're pretty similar.
Absolutely. The funds are trading them very tightly together, a higher correlation than even normal. And I feel like that the money flow has been going into both of those equally. Also, given that perspective, if you don't cut rates in September like they're expected to, maybe that could help more of a sell-off, more of a liquidation through something like the cattle market. So I'm going to be watching those two quite tightly. I do feel and I do believe, though, I've been a pretty big bull in the S&P, and I think that'll continue. So that should favor the cattle market as well.
So the hog market's been like watching paint dry a little bit, but we had August go off the board today. You've got a big discount now where the futures are to cash. Do we see appreciation in the futures market now or not?
I don't think so. I think the October's really set up in a position, and December, where they're going to sit and wait for a little while to see, do we have that normal drop in index and cutout from this time of the year going forward? And I think they're in a position to just sit and wait. They're at a very normal spot relative to spread history in the past to say, I've priced in that drop. We'll see what we get. But I think it's going to be a normal one. And that's where it's sitting. There's not a lot of outside news in the hog market lately, and you said that yourself. It's been a very sideways, a very boring market relative to the others lately. So I feel like at this point now, we've kind of fought back. October pulled a little bit more off today towards a nice support level. 89 is a level I'm watching very closely on October hogs to see, are we going to hold these kind of old low levels? Is this a nice buying spot? Are we going to find some more appreciation? But honestly, at this point, it seems very comfortable.
Okay, thanks. As always, that is Mike Miner with Professional Ag Marketing, and that's Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Talk with your retailer or visit Brevant.com/win to get started.